And we are rolling. Okay, so we are going to go ahead and continue on. Thank you everybody for coming back. We have Raul Avila. That's it. Raul Avila. And he's going to be speaking to us about the funding group. From what I've heard very briefly in the hallway, this sounds really good. I'm looking forward to your information. I'm looking forward to working with you, so thank you for being here.
Pleasure. Thank you for inviting me.
Okay, you're welcome.
So good afternoon. My name is Raul Avila, as you mentioned. I'm president of the AVFund group. I've been an investor actually for about 32 years. So I do have experience in various types of acquisitions, from fire damage, abandoned projects, REOs, probates, foreclosures. So my experience has been first being an active investor, and over the years then investors would come and ask me what kind of funding sources I had and what would I be using. And honestly in those days it was very secretive. Nobody wanted to share their funding sources because they wanted to keep it to themselves. So things have transitioned over the past years, and I was able to acquire a $100 million line of credit so that I can acquire more properties, but more importantly, I couldn't utilize all that. So I'm able to expand, and I'm helping investors and agents and anyone actually in the industry that knows individuals that use funds for fix and flips. So I'm very excited today. Thank you for inviting me, Linda. And in reference to sharing the funds, and this is what you need, of course, to acquire more wealth. As they would say, money is the lays a golden egg, and that's really what you want to have a good resource for funding. And I'm here not to talk about the competitors, but I want to explain the difference between what other lenders offer and what's available by our company, so that you can see what is truly available to acquire more acquisitions. We don't want to say there's a program, and this is our Lona Valley program, and then change it and switch. And that's what I was disturbed about in the industry, is that they would promise certain things, and then when you're in an escrow for 10 to 15 days, and you need to close a transaction, then you don't have time to be shifting around to other lenders. And that establishes credibility both from an association like the Santa Barbara, and all associations, that when you're recommending someone and you're dealing with investments, if you can't close the deal, it's a very big domino effect on the credibility of an association, on that of the agents you're dealing with, and the escrow. And so there's a lot of pressure and stress that's put behind closing a transaction in 2 weeks, let's say. We've been involved with transactions that close in 5 days, but more realistically, 2 weeks is the period of time to close a transaction. So credibility is extremely important. Just something like Paul, my previous speaker, mentioned about having a book. That adds to credibility if you're out there doing transactions. But importantly, if you're active in doing acquisitions, you have to have the money lined up in advance before you go out and put offers on deals. So I take advantage of having individuals give us their experience, individuals give us their documentation, and understanding our program, and seeing actual transactions that we've closed. One of the things is to talk about a program, the other thing is to be able to prove that you've delivered closing transactions of different sizes, whether it's just a smaller price range or whether the rehab is extensive. Not just in the old days you come in and little cosmetic rehab and you patch and paint and you're going to make a lot of money. It doesn't exist anymore. You've got to add value and benefit to your property. So there may be times where you're going to do an extensive rehab. It could be from $20, $50, $100. I've done rehabs up to $400,000. So doing more than cosmetic, you want to be able to have the funds available so that before you present an offer, you know that you've got the capital behind you. And then you can structure offers, buy properties that maybe need more rehab, and not be afraid that you have the funds available through our organization to close those deals so that you have a little bit less competition. So I want to basically educate you on certain things. It's very intimate here. We can discuss anytime you have any questions, raise your hand, and add to the ability that you can have cash available to close these deals with a very aggressive program. So I'll get started here.
Got a question for you.
Yes.
And I think this is timed down a little bit, so you're
Okay.
going to have to do this.
Okay.
Get it back going. When you say you have the funding, is this funding strictly for rehabs, or is it also for, let's say you have tenants that you want to be able to get qualified for a loan? Do you do lending? This is Linda's laptop here, so I'm not quite sure
You have to snooze it. Oh, for longer, yeah.
Think we can make it on a day?
Yeah.
There we go. Okay.
Then you hit snooze after you hit, yeah, after you choose that, yeah. Wow.
It's
There's more than one.
okay.
Maybe there's more than one opening.
His face isn't important.
Exactly.
Just stand
Just
right
gonna
there,
look
Raul, right where your face will be.
Exactly. Well, let's see, you go to the next one, see.
Technical difficulties, huh? How about let's try, it keeps coming up and saying, it's going to, let's see, snooze, 1 day, 1 hour, snooze, and it just keeps coming up.
Choose a different time frame, maybe.
You want to put the previous slide or just see?
Can you go to a different slide?
It's the computer, not the slide.
Okay. Let's see here. Realty, expert loans, snooze for,
Just go into it.
dismiss. Just keep popping up. Okay, let's do this.
I think it's because it's reminding you it's today, so it's not gonna let you snooze for a day, but it might let you snooze for like an hour or something like that. Yep. And then hit snooze. Wow.
Click on the event and see what's going on.
Okay.
How many of these are in the calendar? No question.
Yeah.
I don't realize how I got here at 3.
You want to try to restart this thing?
Or how about if we turn the volume down and we just,
I think we got it. I think it just went away. Okay, so which one was it? Where's the, this one over here? That one there? And this one up here? That one right there? Okay, is this it? Open up this over here. These, okay, sorry about the technical difficulties.
Thank you so much.
So the question was, do you do lending for, say you want to qualify a tenant so that they can purchase a property, or is it strictly construction or
So ours
rehab?
Ours, first of all, are non-owner occupied, so we don't do
Okay.
any owner occupied
Okay.
lending.
Okay,
And then those who want rental, we do have a different program for rental. And depending on those, we can do, of course, 1 to 4 units. We can actually do some small apartment units. The only difference is whether or not you want to have full rehab funds included, we can include that in the program.
okay, okay, but not qualifying a tenant to purchase the rental?
No, it's
Okay,
strictly owner,
Okay.
non-owner occupied.
thank you.
So I started the industry with my family. My father had Avila Electric Company back in 1980. I purchased my first apartment building, it was a 16 unit at the age of 20. When I entered the business, it was actually only apartments, that's how I got into business, because they didn't have any financing. So it was all owner carryback. For example, there was, the owners would carry first, second, third, fourth, I got into six, I got into what they call all-inclusive trust deeds, wrapping one deed against another deed. And that's how I learned the business. There was no existing financing lenders that would go out and do these kind of buildings, so it was strictly owner carryback. So as I entered that industry, I learned that type of financing, then we went into smaller units, SFRs, 1 to 4 units. So there's no bank financing at the time, but we did purchase foreclosures, probates, gang houses, abandoned projects, city condemned properties, fire damage, move-ons. We actually moved on properties from West Los Angeles, jacked them up, and actually moved them to East Los Angeles. We actually had, at the evening, it was probably about 2 in the morning, actually jacked them all up and actually moved them under the bridges, and then we had created foundations and then laid the house back on the foundation. So it's not economic to do that anymore, but our experience enabled us to learn a lot more. So we've been involved with quite a few things and actively working with our communities, especially with the mayors and different people that have these kind of projects that you can get more better deals on, actually. I had the pleasure of working with, I was President of American Red Cross. I was had a function with President Ronald Reagan. I worked closely with the Mayor of Los Angeles, Eric Garcetti, and past Mayor of Los Angeles, Antonio Villalobos. Basically, the purpose is that everyone should get involved in the community you're going to work on. Get involved with the mayor, the city council members, get involved with the chambers, associations, because there are relationships that you'll need when you start acquiring properties and doing rehabs, and they could be good sources of those relationships. But more importantly, we are doing something in our community. We are revitalizing our community. And I can focus a little bit on that we're not just here to, yes, we're here to fix and flip, but we're doing something to our community. We're revitalizing our community, and we actually are bringing economic base to our school boards, because you are able to get more school funding once you have families move into your fix and flip properties. You do have a higher tax base on the property, so we are affecting a good portion of our economy by fixing up and fixing up properties. So what I kind of like to say is that we're really revitalizing our communities. We're not going in and just trying to take profit and run out, but leave a good product for home ownership, right? That's what's important. And if we have good funding through my source, you're able to do a better rehab rather than just doing a cosmetic or some Mickey Mouse type of rehab. We really want to produce a good product so we can bring it into home ownership. But I've been able to actually acquire properties. The mayors have actually worked with me. We've stopped properties from being demolished. Those properties have been abated, and not just Los Angeles. I just closed a deal in Ontario. In Ontario, there was a property that was an REO, and the actual city filed substandard notices against the property and actually had a less pendants against the property. And that took some exercise. I actually had to hire my attorney to be able to get through that and help the seller, even though the bank was the seller. In this instance, they paid $20,000 of fees to the city. They still had this property frozen, and my buyer couldn't close the transaction. So I actually hired my attorney, got through to get the title insurance, and able to close it. So even in Ontario, they filed these documents as substandard notices because the cities are getting more pressure from the constituents. So there may be a property that's vacant, that's been around in foreclosure for a couple of years, and the banks, again, are holding back the foreclosures to become REOs, right? So they're retaining them because they don't want to flood the market, and so the government now is being very careful of how they allow banks to let these REO properties go out. I haven't been involved in REO in a pretty good time, but this one was recently, just a month ago, like I said, in Ontario, and they are coming back. So what's really important there is to be able to find a lender that knows how to deal with the city, knows how to deal with the title, to get these issues cleared up so that we can in fact close them. So the REO listing agent and the investor was excited that I was able to produce and get that transaction done. So our skills is just not providing funding. It actually sometimes gets involved with the city and different things, the title company, to clear issues up so we can proceed to get those deals closed.
Let's say I found a property that needs to be rehabbed, and I assigned that contract to another investor, and they came to you and said, well, I can't really do this unless I get your funding to do this. Normally, in a standard transaction, a mortgage company, a title company isn't going to accept the double escrow or whatever. Would your funding be able to take the investor that I just wholesaled this property to and fund them without the problem of maybe a double closing or something else?
Yeah, so I'm familiar with that. Escrows now are not allowed to do what we call concurrent escrows.
Okay.
It's another word, you know, we said double escrow, concurrent escrow.
Mhm.
As long as they have a separate escrow, so you may, and depending on your wholesale, if you actually just assign your wholesale contract, and you may have been in escrow, or depending if you're not in escrow yet, and you're just assigning the wholesale contract, the moment he opens up escrow, then we'll be dealing with him as the buyer. So if the buyer, that investor pays you your fee, say up front,
Right.
you sign the contract, okay, here's my wholesale contract, give me
Okay.
$10,000, for example.
Right.
Then he will proceed to open up escrow and title, depending on what's on your purchase contract.
Gotcha.
Or if you haven't indicated that, whatever the seller's choice of the escrow and title. And then I'll just deal with that investor directly and fund that transaction.
And the seller.
Yes,
Perfect. So we got a solution for the wholesale.
absolutely.
Good.
Yeah, I've been involved with that quite a bit
Okay.
before. And there are some companies, there's some very professional wholesale companies that I've met recently the last few years, and they do a lot of the concurrent escrow. So they have to have a title company that's prepared, but they actually buy the property, and when they're gonna close today, they already have a buyer, and they're gonna close either that afternoon or the next day. So that's a
Yeah.
little tighter concurrent close of escrow.
Yeah, it's easier to do if you buy it, but if you didn't want to buy it, you still could deal with it and still make it
Absolutely.
happen.
I just need a contract that he's gonna use when he opens up escrow instructions, the title, we're ready to
Gotcha.
go.
Okay, good. And might have to touch that,
That screen here?
there, you're up, you're good.
So, types of hard money, and in this industry, you know, that's what it's called, is hard money. So you had a question?
Yeah, the only deal in LA.
Oh, no, actually, I could do all entire state of California and nationwide. My concentration's here because I'm based out of Los Angeles, but my program works nationwide. And the only difference is that my appraiser that's here in California can only do this. I have to have appraisals, which we have lined up for any other state.
And I'd just like to add that if you're wholesaling, why would you want to go to a place that makes less money than California? That's where the big deals are.
Absolutely, yeah, because you got a greater purchase price than back east, or not New York, but certain states. I had an investor ask us, there were some properties that were selling at, I think, $10,000 Milwaukee. And the rehab was pretty substantial, but our minimum loan amount is actually $70,000. It takes a lot of work, but a lot of times those low-priced properties, they don't have a lot of capital, the investor can walk away a lot easier.
Talking a couple hundred maybe.
Yeah, that's a lot easier. Absolutely. So, just to give you a little example, hard money they lend is towards equity loans, purchase loans, fix and flips, construction loans, land loans, property purchases. And basically, most of them require 25 to 30% down on a normal acquisition, and you put up your own rehab money. So we use SFRs, multifamily, commercial, industrial. I'll touch a little bit on the fix and flips and then the construction. So we actually do have a different program for new construction. So those of you who are actually interested in that, you should be aware of the kind of capital it takes to do new construction, because you'll need to know that when you purchase properties, you'll have to put normally 50% down when you're buying land, and you have to have the money to have an architect and have your planner and so forth. So there's more fees involved to get a new construction project done. But we have a very aggressive program. Our actual program is if you put 50% down your land, we will do 100% of your construction costs, which is really unbelievable because most construction lenders require 25 to 30% down on your construction costs. But we will do 100% construction costs and we'll go up to 70% of the ARV. So it's really a very aggressive program, but you should have some experience. And just know that typically you're going to have more capital out than a flip. But I have different investors that have different capabilities. But the very, very strong, aggressive is doing 100% construction on new construction. So hard money loan and value ratios, everybody determines it a little differently, but basically most lenders will go up to 60-65% of the current value. Some lenders will be based on after repair value, ARV, and what that means is that you determine the property you're buying it at today's value, whatever your purchase price is, and then my appraiser will go ahead with the cost breakdown, determine what that property will be worth once it's completed. So it's not like he's got a magic ball, but basically that appraiser is determining after the repairs have been put into the property, what would it sell for completed in today's market? And so based on those two values is how we lend our money out. And most lenders will go 60, 65, we will go 75%. I'll get into that a little later. And so we have a very high LTV on the back end to do that.
So your appraiser's going out when the person buys a property and determining that at that particular point in time?
Exactly, exactly. And for anything here in California, my appraiser's out of Orange County. I've dealt with him for about 15 years. Extremely experienced, because, not to impress him, but his reports are about 75 pages long. But why? Is because that enables my credit line to fund me on my projects that I'm doing for you, and solidifying that value is there. So it'll do the as-is value and the ARV value. And I guess I'll just take it a moment right now. Fortunately, unfortunately, I borrowed from other hard money lenders, so I know the games that are out there that I played. The key issue is appraisal value. So no matter what any lender says they'll do, whatever ratios they'll do, the lender will tell them to cut the value. So on your ARV, where you and I think it may be worth $500,000, they'll come in at 450, 460, 470. And it's just part of the market. That's just what they do, because why? They want the investor to have more skin in the deal. So not that they trick you, but the reality is they say, well, that's what the appraiser can lend. That's all we can lend you. Whereas I don't tell my appraiser to cut the value. If it's worth $500,000, he's gonna come in at $500,000. And that's what's gonna make the difference from me making my deals close versus my competitors who will have their investors put up the money, and if you're in a short escrow, you've got to close quickly, you don't have time to be shopping around. So most investors will put up the additional capital, but they're upset. They're disappointed because if they're buying multiple deals, that's enabling from them to acquire more property. So I say this up front so that everyone can compare apples with apples, so that when someone says, okay, what's the difference between this lender and Raul with the AVFund group? That's the bottom line, when I can show testimonies of deals that have closed, and you can see that what I say I'm going to perform, that's what's going to happen, and not get into the appraisal issue, which is a key thing. Because once that appraisal is done, that's what that's what the numbers come out to. So we know that there's been that budget there, so that's what we're credited. So we talked about 30-35% down on the credit report, basic exit strategy, how are you going to repay the loan? Repayment is basically normally between 12 to 24 months, and the type of collateral. Our programs is 12 months interest only. We do not have any prepayment penalty, which enables you that if you sell and flip it in 2-3 months, that's all the interest you pay on it. We don't have any prepaid interest and prepaid mortgage payments as well. So the first payment will be 30 days after you close escrow. Interest rates and points. Charge by lender will vary from lender to lender. California, of course, is very competitive versus other states. High risk to lenders compared to conventional banks, therefore higher interest rates. So basically what I'd like to say is that, yes, the hard money lending in this industry is a little higher than your conventional banks, but conventional banks are not going to lend on fix and flips. They're not able to do that, not because they're not set up, but they just don't do that. So the interest rates, of course, are a little higher than conventional banks, but the important thing is you have the flexibility to come in with a less down payment, and you have the flexibility of having rehabs included. That same thing applies to new construction. Interest rates compared from California and other states, our program is consistently the same. So we don't charge more if it's California or any other state, that you're doing the fix and flip program. So AVFund, ARV appraisal form. So we mentioned my appraiser has actually appraised his first property in South LA, we consider Watts. And he's done a $50 million appraisal in Orange County. He's done 200 units for Wells Fargo Bank. So his experience is vast from the SFRs to apartments in Marina Del Rey. And that enables us to have more experience because what? When you're doing a loan, you want to make sure you have an appraiser who knows how to appraise the acquisition you're acquiring so that you can get the best loan possible. He's had prior experience. He's mentioned his reports are 75 pages. Our appraiser does a report on the ARV and also the as-is, enabling us really to get the best price. So if you're buying the property at the right price, he's going to come in and validate what you're buying it for. If you're buying it at $200,000 and it's only worth $150,000, you should really just cancel the deal and move on. So my appraiser is going to validate your acquisition price, and of course he's going to evaluate what the ARV is. So if we're both right on the same page, he'll be able to confirm that your projections are the same. I've actually had one appraisal that did not come in because the investor thought it was going to be $20,000 rehab. And my appraiser said, this needs at least $80,000 in rehab. So there was two complete different variations, and so we don't want to make sure we're lending money if the investor doesn't have the right rehab budget in place. So that was the only time it was really denied. But other than that, most of the time it comes through. So our program, 85% of the purchase price, 100% of the rehab is in one loan. There are some lenders that do 2 loans, which cost more. We do ours in 1 loan. And it's 75% of the ARV. The differences between capital funds and private individual funds, there are lenders who actually will ask private individuals to come up with money. So maybe somebody have $100,000, $200,000, they pull that money together to fund your loan. I don't. Mine is capital funds, where we just have the program, we're able to fund it, you don't have to worry about waiting behind the scenes for the investor or the lender to actually come up with the money to close your deal. They won't tell you that, but sometimes, they're delayed in closing deals, and they'll give you excuses why they can't close your deal, but really what they're doing is trying to raise the capital behind the scenes in order to close your deal. So you don't want to get stuck with that. That's what I'm here to share with you, that you want to know how the money is being able to be derived to fund your deal, and not have to wait and rely on private individuals. There's nothing wrong with that, but when you're doing large transactions and you want the funds quickly, that's where you need to have a good group of funds available to close your deals. You could use investors to help you in borrowing more money if you're going to go into joint venture partnerships, but you want to basically have a source of money that when you need to close that deal, it's available, or that a lender doesn't tell you, oh, I'm sorry, that program was available, but we ran out of money, and now you've got to use this cost of money, or this program, or now you've got to use this amount of down payment. It's switch and bait. And like I said, I only say these things not to put my competitors, down, but it's because I want you to understand what really is out there and not have to be affected by that. I went through that. I've been through the trenches. I've lost money. I've been through all those kind of things, and there's no need to recreate the wheel. Just learn from my experience that these things exist, and we want to basically help eliminate that so that when you get involved, you can get the best lender possible for you, having someone experienced. So I don't like to say negative things, but I just want to bring them up so that you know this exists. Yes?
So 85% of the purchase price, great. So how does the construction rehab class get funded? Do I do it first, your guy comes out and check, then you disperse the funds to me? Like, how's that?
So what we do is we put that money into a fund control. When you first acquire the property, we're going to give you a 2-page breakdown of your rehab budget. You're going to complete that rehab budget, windows, doors, plumbing, etc. That 2-page report is going to go to our appraiser. So when he goes out there to appraise the property, you're going to meet him there if you're local. Meet him there, you'll describe what your rehab budget is going to be. He's going to confirm it is correct. At that point, once we fund the loan and it's closed, we're going to set that rehab budget aside. So let's say it's $80,000. And we'll basically work with you to tell you how we can time frame this. When it closes, you'll have to put the initial start of maybe $10,000, $15,000. But when we work this, you'll let my processor know that in 2 weeks or a week and a half, your workers are going to have certain things accomplished already. Say 5 trade lines done. So you submit your paperwork, my inspector will call you and tell you we can set up the appointment for next Wednesday, even though the work hasn't been done yet, but you know your worker's going to have it done.
Right.
Then at that point, the inspector calls you, it's done. He checks off that all the things that you said you're going to have done were done. In 48 hours, we'll wire you the money for reimbursement, and then you just continue doing that. So we're not going to take a long time. We want to see the project moving along. And that's a good question because there's other lenders who have a different process. And a lot of my experienced investors say, Raul, I don't want to go through this. And when I tell them the way we do that, they enjoy seeing that work very quickly.
So turnaround time will actually be longer if you have a guy, you said, in Orange County?
Well, that's my appraiser. But my appraiser doesn't do the fund control. He only does the valuation of the property. We have a separate department that will do the inspection for the fund control. But the form you gave our appraiser to give us a breakdown of your rehab is what's going to go to the inspector when he goes out and looks at the property. And he's not there to look at all the little details. He just said, if the window's done, the roof's done, this, the windows are, that's it. Checks it off, lets us know it's okay, 48 hours you wire your account. We don't want to hold up any funding for you to finish your project. Since we're talking about that, another real important thing is that when we fund our transactions and we close, let's say you have a rehab of $80,000, $100,000, most lenders at that point will charge you the interest on those rehab accounts once it's closed. We don't. We will charge interest once your money is drawn. So if you take 3 months to do it, you'll just charge as the draws are going on. That's good whether it's a one investment property or some investors have multiple projects and they have 200, 300. So those budgets will add up by having interest charged. So that's additional benefit, not having those interest charged against you at the time.